On to the next one. So what are some common mistakes that business owners make when it comes to integrating their finances? So I know you kind of touched on this initially, maybe as that farm family, things are pretty integrated. I mean, you live on the farm, you walk out the door and you're right to work. So things are pretty tied together. Whereas maybe if you're working in a different setting, you maybe own an office space or a retail space, there's a bit of division there physically, and that helps. But I know a lot of clients will come in and, it's always a bit of a tough conversation to kind of say, well, you're an entity and the business or the farm is an entity. And in order to kind of make both of those work, we need to have a good understanding of what both of those requires in order to operate efficiently.
Yes. I always encourage people to the best of their ability to keep it separate, whether you're incorporated or not. For whatever the business is, have a separate checking and savings, have a separate credit card, so that it makes your accountant's life easier at the end of the year.
Important.
And you get a clear picture of what are my business expenses, what are my personal expenses.
Right.
There's always going to be a little bit of overlap. That's one of the beauties of being a business owner.
Yep.
But to try to the best of your ability, clearly separate what is personal money and what is business money, so that as you're planning things down the road, you know what your personal expenses are when you are no longer the owner of that business, and what your true net income is coming to you personally.
Right.
Because sometimes when you're a sole proprietor or a partnership, it gets really easy for it to blend together. And it's hard to know, other than when you look at your tax documents at the end of the year, what did I truly make versus what were my expenses. So that's usually what I try and do, try and keep them separate. And now that online banking makes it so easy to nickname accounts, just go in, name them whatever you want.
Right.
That's what we have. The business ones are all named. The other ones say personal checking.
Okay.
Right? Keep them very separate. Some people do go as far as having them at totally different institutions, so that they just know the color of their debit card. Red one's business, blue is personal, or whatever makes it easier.
Gotcha.
Yeah, that's the most common one that I see.
Okay.
Is not separating them.
And I can probably piggyback off of that from real life. I think the biggest one that I see is, in that incorporated position, maybe they have a vehicle that they own personally. So all of the expenses are being run through that business. At the end of the year, I'm charging all that back to them personally. Then we're recording some sort of mileage allowance. But I don't think people grasp the amount of dollars that they're kind of spending over the course of that fiscal period on that vehicle. And then usually what that translates into is maybe a higher than expected dividend to them. And then they're wondering, well, I only took out X dollars during the year. And then I kind of have to say, well, this was the vehicle expenses. It was offset by a little bit of mileage, and the difference, that's kind of going to you, and that's why that dividend keeps going up and up and up. So having that firm line, this is business, this is personal, I think that definitely helps, irregardless of whether it's a farm or just a traditional business in town here.
It is, because it gets really tricky if you've always done that. And what I find is that people have underestimated how much their personal expenses are.
Correct.
So when they are retired or no longer own that business, it was hard to remember that fuel, insurance, right? All those things are now 100% personal.
For sure.
So, yeah.
Nope, makes sense.